good evening, all of you all. God bless.
So, dear Vaibhav Jain, I have met in SP Jain, a very outstanding student, right? And he is from the financial markets field. So, here I present to you my dear student, Vaibhav, who is in the market. They have got institutional sales, they do wealth management, they are very much into wealth management. So, the talk is about investments, the talk is about markets.
So this is one of my presentations that I did, in a webinar during the lockdown. And the whole intention around this webinar was that, in my practice over last 15 years, I've always seen money becomes a very critical uh, area in everyone's life. And they, with all due respect to, whatever is taught to us in college, in our entire academic year, nowhere does people teach you how to make money from money. It does remain conceptual, but whatever my learnings were out of interacting with a lot of my clients at presently, I handle about 250 crores worth of assets under management. I have about 600 clients, which are mostly NRIs or business owners. So I'm just sharing, and this is more out of education and my way of contributing to people making financially better decisions. So money is seen as a resource which is readily available for people to fulfill their financial goals. Often when I meet people, and this is for all of you who are, looking at getting employed in the financial space, or maybe looking at getting jobs in wealth management companies, this is something that I want you to, really absorb this, because it's really going to help you tomorrow when you want to take up careers in this field. So what I'm going to share with you is that the outcome of after having shared what I want to is that पैसा आपको कभी भी एक constraint नहीं दिखेगा आपकी life में. You will always feel that it is something which is available and it's not something that limits you. And you are confident while taking money decisions for your clients. Tomorrow, if any of you want to take up, the practice of being an investment advisor or into wealth management, and to further build on clarity in people in saving the right amounts, investing the right amounts, getting the right amounts. So that's with the intention with which I'm sharing. So what I'm just going to share very briefly, I'm going to go through it quickly. So in case you want to take screenshots, you have certain questions on this, just make notes, and I'll make sure I pause at places which are critical for you to look at. So I'm just going to quickly cover financial mistakes people do unknowingly in the area of personal finance. Tomorrow, you all are MBAs, you can go out, have jobs, maybe start your own businesses. You'll have a family to look after. And I want you to be extremely powerful in the area of personal finance so that never you end up taking decisions that impact you adversely in that area. So that's my commitment to all of you. I'm going to just share some practical, easy to apply tools for money management, because very, very often I see people, once they start earning, money is something we see as a resource, it just means to an end. We know how to spend it, but what I want you to really take away from is how can we create more money from money. And I'm just going to introduce the world of investments in a more layman term for you, and probably just share with you certain things. So one misconception people have about money as an area in life is they feel making more money is all that is needed to be rich. Well, that's only half the equation, of the game. The second most critical part is keeping that money. So if you're not good at keeping money, you may not land where you really want to land in life as far as finances is concerned. So it's not about salary that makes you rich, it's your spending habits. So I'm going very basic, and this is more out of just simple educating all of you, since you all are in that juncture of life where, what defines your success will be how you treat money. So I'm quickly going to run through some financial mistakes that we all do unknowingly. So one is people have no idea about power of compounding. All of you to reply on one question. If you have a simple piece of paper, a normal A4 sheet, assume hypothetically you were able to fold it 45 times. How thick or tall can that paper be? Well, what I'm going to share might seem berserk to you, but you can Google this. If you fold a simple piece of paper with a thickness of 0.0001 centimeter and you fold it 45 times, because with every fold it doubles, at the end of 45th fold, it will be equivalent to the distance between Earth and the Moon. And if that sounds berserk, please use Excel and just kind of keep on doubling with every answer, or just simply search on Google and you'll probably get the answer. So that is the power of compounding that people don't really know. We know it conceptually, something we've done in 5th class, but we don't really know what can be the power of compounding when it comes to investments. But just to show you also in money terms, you guys may tomorrow start earning a good amount of salary, but even something as little as 10,000 per month, if you were to invest for the next 30 years with an assumed return of 13%, you would land at 4 crore 37 lakhs, which means in 30 years of your investing your own money, or tomorrow if you take up wealth management as a profession, you would have invested almost close to 36 lakhs in these 30 years, and you would have accumulated 4 crore 37 lakhs. But if you delay this investment by just 3 years, which means you still invested for 27 years, you still invested 32 lakh 40,000, but where it will land you at the end of 27th year will be only 2 crore 93 lakhs, which is by investing just almost 3 lakh 60,000 less, and just missing out on 3 years of compounding that made a whole of 1.4 crores straight. So that is something that I want to share with you on the power of compounding. And as Albert Einstein said, it's the eighth wonder of the world. One who understands it earns it, one who doesn't pays it. So I'm glad that all of you again understood the power of compounding. So please, make some call to actions for yourself in terms of, really experiencing this firsthand. Once you have your jobs, please make sure you start investing for yourself. Okay, so the example when you say that which platform of investment assures this kind of compounding, as Menon sir said very rightly, equity markets do give that. But let me just give you some statistics, and I think this is one of my slides also in the presentation. If you look at the decadal growth of India as an economy, if you combine the decadal growth as well as the inflation in that particular period, we have always compounded in terms of nominal growth at almost 13 to 14% with the GDP growth and the inflation in that period. And if you look at the corporate earnings, if you look at the earnings of the equity markets from inception till now, they've always clocked in a 15 to 17% CAGR since the last, 41 years. So that is something I'm definitely going to share, and there will be some practical examples where you can see what kind of businesses have created that kind of return. So we do have the R as well. So another mistake, again, I'm just going back to my presentation, mistakes that we do unknowingly is the gap in the education system. Very rare do we have things which teach us how to make more money using money. As a society, we don't end up discussing money matters at home. We end up, I'm yet to see, family that discusses money openly with kids, or, husband discussing very openly with wife. I mean, it is something that we tend to keep very secretive. It may happen in some homes, but largely we tend to keep this as a secret. And the impact is that we miss out on the opportunity to contribute in the other person's financial decision. We end up being slightly conservative in our approach while investing. And what I mean by that is we don't factor into account simple concepts like inflation. So if you see, what 100 rupee could buy in 79 and what 100 can buy now is a world of a difference. We may feel this is an elementary concept, but trust me, people, even some of the best minds in the corporate world, when I meet them as clients, they don't factor in inflation as something to really address and look at while investing. So virtually the buying power of 100 rupees now is reduced to a mere tip at a hotel. You don't even know what you can buy in 100 bucks vis-a-vis what we could have bought in 79. And if you also look at, back in 94, when FIs, foreign institutional investors, came into the Indian market, as Indians, we held 100% of the equity in Indian listed companies, and FIs were at zero. And over a period of time, they today own 24% of our entire market capitalization in Indian listed companies. And we, as a as Indians, we have sold an asset which has compounded at 17-18%, and we have chosen to buy things like gold, FDs, which are compounding at 7-8%. So we don't factor in inflation. We're not very clued on to what we are investing into. Maybe because there are not many people who have had positive experiences about equities. It's very, as human beings, we have a negative bias. हमको negative चीजें बहुत जल्दी याद रहती हैं. We forget the positive things, especially when it comes to stock markets. So we do remember Harshad Mehta, Ketan Parekh. We remember all the crashes, but we don't look at the very obvious wealth creators. So people don't end up having a contingency fund for themselves. They don't have a financial plan in place, not looking at second sources of income. There's lesser diversification. It's more in physical assets like real estate, gold, or for some business owners, it's mainly put in business income. So because of financial literacy not being there, because of we not discussing all of this, this is how it lands. So another mistake is we continue to be victims of lifestyle inflation because we want instant gratification. We're all very prone to, having our fingers go on a big $1 billion sale on Amazon, buying something that we need just because it's on sale. And if you see their ads, it's funny when I see them that the only concept of saving these companies are promoting is something available at 100 and you're buying it at 80, so you're saving 20%. That's the concept of saving that that has come to in such a heightened consumerism world. So I'll just summarize all of this in 1 minute. जो भी mistakes हम कर रहे हैं, you can probably look at beyond this slide more. When we are not aware of power of compounding, we end up having investments which are not beating inflation. When we don't do insurance properly, we're not insulating ourselves or our businesses from financial risks. We are leaving the family vulnerable to, such things in case something happens to the earning member. Because there are gaps in the education system, we don't have clarity on how to handle money. So the first key thing that I said, making more money is not a problem, but if you're not able to keep it properly, you will not be able to take care of the family or the business that you may tomorrow end up owning the way you want to. And again, lifestyle inflation, if we keep on buying things that we don't need, you'll never feel that grip on money. So don't be victims to this. These are things that we do unknowingly. And why I'm sharing with all of you is, like I said, if you're not able to hold on to your money properly, it's just become difficult. So this is just a simple slide on how COVID has impacted all of us financially. And it's really important we understand what could have we done better so that we didn't feel the pinch. So businesses have got impacted abruptly. There have been job losses. There have been liquidity issues where organizations and people have gone in a cash conservation mode. Nobody wants to, do away with money very quickly. So we've stopped consuming, or at a business level, people not paying each other very quickly because they want to maintain those, cash levels in books to, ensure that business ka continuity is not, adversely impacted. Incomes have crashed. People are, depleting their savings. Rental incomes have gone for a toss, those who used to depend. And with all this happening around, two factors that would have aggravated people and their situations would be lack of savings and having a single source of income. So, in my interaction with people, when I meet, even good lawyers or, you say a lawyer client of mine who probably earns something like 7 lakhs a month, if I actually ask him, how do you, put your money? Where does it go? How much are you saving? The answer he gave me, Vaibhav, I don't know where all that money goes. And 7 lakhs per month is a good enough amount for one to know about ki ja kahan rahe. And with a lot of people that I come across, they're not clear where the money goes. So the money funnel system that I made was, the idea was, one, people have clarity in terms of what expenses are to be done from where. And again, all of you right now, I see 79 of you. This is extremely valuable if you take this to your parents, discuss it with them as to how are we doing this? How are we managing our money? And when I say managing, I'm not saying investing, because investing se pehle managing aata hai. Agar aap sahi amounts hi nahi save karenge, so you will not be also investing the right amounts. If your saving is not adequate, your investing will also not be adequate, and what you need in future for yourself will also not be adequate. So the main point that we are addressing is, first, let's ensure we have the right amounts. Second is, how much expenses need to be done without impacting any area of your life. So look, discuss this with your parents. Okay, how is the money getting managed? This stops people from being impulsive. It is a very structured tool to build money habits. And again, all of you tomorrow going forward would also be employed in businesses. You would be earning. If you have the right money habits, it will really create a lot of positive things for you. It will really give people a balanced scenario of an enjoyable present and a planned future. I'm sure each and every one of you and your families would definitely want to be in this scenario of having an enjoyable present and a planned future, especially when it comes to finances. So again, the weightages, priorities would depend on, your age, number of dependents, whether you're salaried businessman, and the phase of income life cycle you're in. So I'm sharing with you certain buckets that you need to have for your money. So if you're earning 100 rupees, how do you need to manage and keep that 100 rupees with you? Now, one portion goes towards your monthly funds, your monthly needs, which is your household expenses, rent, daily traveling expenses, EMIs. So why I'm sharing with all of you this is because when I talk to people about investing, I manage almost a good 250 crores. It is important for me to sensitize people. आपने अपना पैसा कैसे रखना है? So 40% goes towards just basic survival. I've written the heads. There is another 20% you may need to allocate towards tax saving investments, Mediclaim, your family having a good holiday. Of course, in COVID times, you're not having that anytime soon. But of course, that is something that you really need to do as well. Your yearly obligations in terms of insurance, income tax obligations, school fee. There is one fund I'm very, I feel we all should, we go overboard while spending, but we need to kind of limit this, which is all your, dining out, spa, movies, shopping, electronics, wherever we do very impulsive expenses. It's important for us to budget how much we want to spend. We want to also spend on our own overall development in terms of learning more, taking care of our health, doing training courses, pursuing our passions. We live in a society where there's a lot of gifting that we need to do between friends, family. We have so many festivals. So allocate some money for that. Then comes the more critical part. You need to be geared up for, say you all are young, tomorrow you will have your own families. You will have these goals to look after. The sooner you start, the sooner you end up investing in a more structured way, the better it is for you. So I've just give this as a breakup to my clients. This is the way you need to put money in different pockets, because हर fund जो मैंने आपको share किया है इसमें has a particular impact on your life, the way you lead and the quality of life you want to lead. So this is something you can take up with your parents and see that can we create a structure that we're doing good investments for a brighter future and we're living a good present. So like I said, 0 to 25, if you look at the life cycle, 25 to 60 is your working life and post 60 is your retirement. So 0 to 25, virtually you have no income, or one is just surviving on pocket money. And 25 to 60 is really the golden period of your accumulation years of your career, which you will all, be jumping into. And at that point, you will have different goals in life. Of course, we are privileged that our, our parents would have taken care of us a lot, and they will continue to do so, till the time they don't, fulfill on these goals for us. But tomorrow, when you guys take on life and you have these goals, you will need to ensure that, all these goals, there will be emergencies. There need to be savings and investments that are happening at every point in time. So, this is one thing I really share as a quote with my clients. If you fail to plan, especially in the area of finance, you are planning to fail. And trust me, nobody wants to fail. But it's just that in our subconscious mind, we either find it too boring, or we feel it's too heavy and I won't understand. We have different sort of, cliches or, thoughts about money. But you'll pay a very heavy price if you don't plan for this right now. So in my own personal experience, when I did the money funnel system for myself a couple of years back, my credit card bills crashed, my habits got altered. I saw money getting collected in my bank accounts because I had dedicated bank accounts for different expenses. And I personally stopped scrambling for money. So if you see any of your parents, or your near ones, dear ones, who end up, kind of scrambling for money, find it difficult sometimes to make ends meet. Sometimes even I do. It's not something bad. But if we do this in a more structured way, maybe money will never limit us as as something materialistic. It will never define what we can do. So, this is my own personal experience that I'm sharing with you out of the money funnel. This is something how it looks like. So because I belong to a business family, a lot of my expenses are taken care of by my business. So this is how I put my pocket money aside. This is money that I draw from my business, which I'm free to spend the way I want, but I still make sure I do it in a more structured way. I even have that for my business. And, now to just give you, as one of the participants shared, where do you get this kind of return? So I'm now just coming to the more meaty part, which is the power of. Okay, so as a service business,
Super.
I have different growth engines that my business needs to thrive on. So I have put in some money aside as working capital for my office running expenses. I make sure I have an investment fund. So part of my earnings that get accumulated, I invest them in shares. I keep money aside for growth and hiring. Uh, I pay my loans systematically. I keep money aside for office improvement, or tomorrow I want to expand from one office to another. I know which fund I'm supposed to dig into. I have a fund where, I like to give back to my employees without taking it back. I have long-term commitments to pay their bonus, leaves, gratuity. So this is how I plan my business savings as well, where never do I go overboard in spending just because I see 50 lakhs in my bank account. Tomorrow I should not get induced to just go out and buy a car just because I have the resources. But if that 50 lakhs is equivalent to, say, one office improvement fund, I'm okay. But I can't spend ad hocly. So this is how it keeps me in check as far as even my business spending is concerned. So showing you some power of equity, and this is more in line with one of the questions that was asked, that where can we get the kind of returns, I'm talking about. So just imagine how much can 10,000 rupees, investing one time amount of 10,000 rupees for 40 years, over a period of 40 years, in any financial instrument that you can think of. Kitna बढ़ सकता है वो? So I'm just now trying to share how much 10,000 rupee investment made one time 40 years back, how much can it be? So if you have subscribed to 100 shares of this company with a 100 rupee face value, over these years, with bonuses, splits, as you see in 1980, you had 100 shares. The company gave a bonus 1:1. You had 200 shares and the price would have halved. In 85, again, 1:1 bonus. So 400 shares, price would have halved. So stock splits karte in 2017, one would have landed at 1 crore 92 lakh shares of this company. And it's an Indian company. The present valuation of this could be somewhere close to 741 crores. And the company is Wipro. So these kind of stories will make you experience returns not in 15-16% CAGR, but multiples of that. It's a humongous kind of return. So now why I'm sharing this with all of you is because, this is the concept and the thought process we share with our clients, because we've lived this experience ourselves as a family. And I've not shared about that, but as we go along, I'll just share. So our thought process is, if you look at who are the richest people in the world, if you look at some of these, Jeff Bezos saw his valuation go up 73 billion US dollars only in the last year. That's the kind of money one idea of Amazon has made him reach a valuation of $145 billion. If you look at all these people, one of the richest people, Mark Zuckerberg, again, he started Facebook with a simple idea of having an online social network platform. And he believed in that idea. And today it's one of the largest tech companies in the world, which is not even creating any content. We are the ones who create content on it. So if you look at all of them, and you just ask yourself one question: why are they rich? They didn't inherit anything. They believed in an idea, and they created a business out of it, which has done phenomenal growth for them. So for us, investing in equities is very simple. It's as good as investing in a business. And this is again a picture I got out of a magazine. If you look at all the companies which have become an integral part of our daily life, we can't do away without them. Whether it's stationery, whether it's food, whether it's the clothes we eat, or the even if you are watching a OTT platform today, you can't do without a Reliance or a Bharti Airtel. The paint on your wall, anything and everything. So I zeroed down on three examples from here. One is Titan, which is a Tata company which owns the jewelry brand Tanishq. They have eyewear and watches by the name of Timex and Fast Track. I've taken an example of Maruti, which is one of the market leaders in the passenger vehicle segment with a 51% market share, and a household name like Britannia, jiska cheese, biscuits, breads, the works we've been eating ever since we were kids. So let's look at what these businesses have done over the last maybe a decade or so. If you look at Titan, in 2008, sales were 3,000 crores. Today, they touch a sales of 20,000 crores. The profit, which was 158 crores, today is 1,500 crores. So while the ladies can be very happy buying gold and buying, jewelry for marriages, this business has made a 22 times return in 12 years. So by the rule of 72, if if we see how much time does it take for our money to double, if we look at a 6% FD return and divided by 72, in 12 years, we double money. So 1 lakh becomes 2 lakhs, that also pre-tax. So we still have to pay tax on that. Here, a business has made 22 times in that same period. So while someone would have made 2 lakhs in FD, somebody else who would have invested in a business like that has made 22 lakhs in the same period. If we look at Maruti touching a sales from 17,000 crores to 75,000 crores, again, every Indian household once in their life would have bought a Maruti car, at least the middle class, if I talk about that. So that stock has also gone up 10 times in that same period. And say a household name like Britannia, whose products we consume day in, day out, has made your money go up 28 times, because the profits jump from 200 crores to almost 1,400 crores. Now that's the kind of growth a business can see and will continue to see. And why I say continue, if you look at whether a real estate or something like a gold, क्या एक 100 ग्राम का गोल्ड का बिस्किट 200 ग्राम अपने आप हो सकता है? Maybe no, not even maybe, it can't go. It'll remain a 1,000 gram bar if you buy it. or if you've bought a 3 bhk flat somewhere, it won't automatically multiply into a 5 bhk. They both may vary in terms of the value, but they will not increase in size, right? But if you look at business as an asset, while the valuation will go up and down, but for a business owner, it is an ungiven rule. And if we go by the law of the accounting law of being an ongoing concern, agar usko ek ongoing concern bhi rehna hai, it will continue to see costs go up in terms of employee costs, working capital costs. Business will continue to grow because its expenses will continue to grow. No business owner works with the thought process that मेरे को इतना ही कमाना और मेरा business इतना ही रहेगा. It is a natural instinct for any business owner to ensure that his business achieves, his or her business achieves greater heights with every passing year. So if a business is going to continue to grow and expand exponentially, why should, so if you see and again, these are some examples. If you would have matched the purchase of a Maruti car equivalent to the stocks also, एक 25,000 का इन्वेस्टमेंट मारुति में जो 2003 में इतने का आता था, आपने स्टॉक लिया होता तो 1.25 करोड़ का आज वो मारुति होता जिससे शायद आप एक बेंटले ले सकते थे. Or if you look at an Eicher Motors and you would have invested 1 lakh in buying that bike and buying the stocks of that company, it would have been worth 2 crores today. So my only question to all of you is, which you should ask yourself, maybe your family, if we are going to be part of the growth story of businesses like these and many such businesses like loyal customers, why not reap the benefits as an owner of the company too? Because as Warren Buffett says, there is no difference between owning one share or 100% of a company. You are still an owner or a shareholder. So if today you own stocks of Facebook, you're as good as an owner of Mark Zuckerberg's company. You both are owners. He makes the same percentage gain as you do. So whether you look at a foreign business or an Indian business, of course, investing globally right now is not as comfortable. But even if you look at a domestic company, whether Mr. Nusli Wadia owns 80% of Britannia and you own 10 shares, you both are still owners. So if we are going to see businesses like these or themes like these play out, which are going to see consistent growth and demand from us day in, day out, why not be owners of those businesses? And this is again, just to show you the decadal growth that I was talking about. In 81 to 90, we had a GDP growth of 5.6 and we had an inflation of 8.6. If you look at all the previous decades, we have seen the nominal GDP growth at 13 to 14%. And you can see the average inflation, the average return of FDs, gold, and equity markets. Because at the end, businesses will continue to thrive. So this is a proof of concept that the nominal GDP growth that we see our country growing at is what is replicated by corporate earnings and the stock markets. So if you are a firm believer that India as a country having a demographic dividend of one of the youngest populations in the world will continue to thrive, will continue to grow, then this would be the best place to invest in. So I'm just leaving you with some quotes by Warren Buffett. Never depend on a single source of income. Make investments to create second source. You guys are young. You guys are learning these concepts day in, day out. Don't delay on spending. Again, if you buy things you don't need, you'll have to sell things you need. The third one is probably the most important one, which people are not doing and which I really request all of you to look at is, don't save what is left after spending, but spend whatever is left after saving. So my money funnel is also something that, helps people do that in a very structured way. So that is all I would want to share in terms of the knowledge that I have. And thank you, Menon sir, for always teaching us such fabulous things. I mean, you are one of biggest contributors in where I am right now in my journey of life and in my business. Thank you so much.
Right. Please note a couple of things that Vaibhav ji said before we wind up the session. One is he gave a lot of insight into wealth management, because ultimately valuation leads to what? Valuation leads to wealth management. So even if you're going to, and I told only one thing to Vaibhav. I said, Vaibhav, bete, either they'll go for interviews or they'll start something of their own. He said, I'll take care, sir. Because आजकल interviews भी हो रहा है, and I know it's going to get tougher whenever new kids graduate. So he said, I'll take care. So there were some profound insights on wealth management. There were some very, very profound insights on, right, what is called as the power of compounding. The example of Wipro, which came out extremely well. So it's about selecting the right investment with understanding what is called as EIC analysis. Now that you understand what Vaibhav has delivered, I would like to introduce dear Vaibhav to you all. Vaibhav is the founder and managing partner of Hemraj Financial Services. The brand name is Save Pro. And has an experience of 15 years in the financial markets. He comes from a business family which has a 147-year-old presence, right? Known as, but you'll have to say that name.
It is by the name of Gendamal Hemraj.
Yes, I didn't want to make a mistake pronouncing it, right? The group has business interests across 6 sectors, and the wealth management business is something that Vaibhav is extremely passionate about and personally being spearheading since 2005. He has done his graduation, right, which specialized in finance. It came out when he spoke. He also did his post-graduation from SP Jain, where I was privileged to meet this young man, in family managed business course. He is a certified financial goal planner by the American Academy of Financial Management India, and has many other certifications related to investment field from NISF. That is Vaibhav's portfolio for all of you. Now that he has finished speaking, thank you very, very much, Vaibhav Bete. You took time out. You really took time out from all of us. The heartfelt thanks. You could have easily said no. I've taught you 10 years back, but moment I called, you said I'll come. Okay, and I'm so happy you came and shared your knowledge. You can see the feedback from all the students. And one line I think was the best line: broaden my investing horizon. So that I think is one of the, from an MBA students coming to you, I think that's the best. Thank you, Vaibhav Bete. God bless. God bless. Thank you very, very much.
Bye.